Welcome, ladies and gentlemen. Yes. Tuesday. Nothing much is happening in the markets. Seems like we've got ourselves a little bit of a recovery going off. Bitcoin coming back into a very interesting zone. Seems like everyone's got to the grips with what's going on with the Japanese. Jokes aside, gang, welcome. And if you are new, my name is Tino. And if you don't know already, you've tuned into Trader's Reality. And the reality of it is this. In 8 days' time, we are going to know the truth as to whether or not Bitcoin has found the old bottom. Maybe. Druckenmiller. Does anyone know who Druckenmiller is? He's the dude that has been short on the US bond market for the past, 8-9 months? And he was in his right to be that way because, of course, tariffs and all of that stuff and the high yields in the stock market, or should I say in the interest rate market. He's done a good bet. In an interview ages ago, he broke down the idea of why every single morning he gets 270 charts sent to his desk or in an email. And he uses the charts just to make decisions on where he should be putting the billions of dollars that he is managing. And the anchor guy said to him, so what do you use? Do you use fundamental analysis or technical analysis? And he goes, he will never make a choice on where to distribute capital purely off technical analysis. It has to marry up with the fundamentals. He will also look at something that's fundamental. And even if the chart doesn't say so, there's a reason why the chart is not letting him marry up the fundamentals, which in that instance, he'll say, I'll wait. But you can appreciate that without fundamentals, it's going to be hard to really navigate the technicals. But that's because we're in an environment where we have to pay attention to fundamentals. Why? US wants to cut its interest rates. The euro has been cutting its interest rates. The Bank of Japan are increasing their interest rates. The UK have been cutting their interest rates. And everybody else around the world have been cutting rates, except for the yen. Now, what am I talking about in 8 days' time? Well, it's the FOMC. Bets are coming in that we are going to see the rate cut in December. And given this story behind the Japanese, it's a very serious thing. And you might think, all right, Tina, you've said it. No, ladies and gentlemen, they're being kind to us. They are being very kind in letting us know that they are going to hike the interest rates. And whatever you're witnessing to the upside, just make sure you're taking something off the table. Because categorically, fundamentally, when the Japanese increase their interest rates, investors don't like it because they've borrowed off the yen. So it's going to cost them more money. The problem we've got is that little word that you might have an association with MicroStrategy, speaking of which, they've raised $1.44 billion as a backing for dividend payments in the future. Why would they be doing that? Why aren't you buying your Bitcoin? I'm going to dive into that very shortly. But I'm going to break everything down for you guys, just so you are aligned with understanding why fundamentally we have to pay attention to what's going on in the bigger picture of the macros. When interest rates are done and they have said, that's it, we're not cutting, we're not increasing, then we can go back to the technicals because the market doesn't have anything to go off then. It knows where it stands on the cost of borrowing money. So we can then just trade the technicals. But right now, we have to pay attention to the fundamentals to aid us in understanding the technicals. You've always got to ask yourself, why would someone borrow money and buy an asset? Because that's what's going on. Leverage. People borrow money. Funds borrow money. Remember the LIBOR, the London Interbank Offer Rate? Every single morning, the banks would wake up and be like, woo, well, what's your rate today, sir? What can you give me? It happens all the time, so we've got to pay attention to it. With that being said, Bitcoin is making a nice little flavorsome move to the upside. So let's get with the program, ladies and gentlemen, because you're all here for charts. You're not here for fundamentals. You're not interested in whether or not the Bank of Japan increases their interest rates, even though you'll be coming back here saying, he has been banging on about it quite a bit. Well, it's I've been timing it well because when their inflation rate, I'm not going to get into it. Anyway, here we go. So Bitcoin, look at that. Nice little climb again. But cryptocurrency had a smack yesterday. $1 billion wipeout across the board. I hope you paid yourselves, man. That hurt a lot of people. Another liquidation event has happened in crypto. You see, when Bloomberg puts these titles, it does stop the new investor from going, hold on a second. Why should I invest in Bitcoin? Look how much they've lost. Forget that. But what we're going to do right now is going to lay down the framework. So if you think that there's someone out there that's like, buy Bitcoin, buy Bitcoin, buy Bitcoin, okay, show them this video. Maybe share it. Maybe like the live. Or maybe subscribe if you want to know more. Let me break down what I've got to explain to you, okay? Check this out. Cryptocurrency has obviously seen a bit of a smack across the board, but that's only because of what's been going on over the weekend. And then, of course, yesterday where we had Bank of Japan's Ueda discussing the story of where we are with the interest rates. I mean, it's getting very, very interesting. This is what no one is paying attention to. This is the clue. This here. Japanese bonds gain a solid 10-year sale. Demand brings relief. What does this tell you? Well, it tells you to go over to the Bank of Japan's yields. The 10-year bond market saw a good demand, so they gave an auction, okay? And the Bank of Japan turned around, or the government of Japan said, hey, guys, listen, we know the rates are at 8.6%. Where are we at with the rates? Here we go. 1.86. Here you go. That's where we are. These are very, very lucrative areas for investors to pick up on that little word that I didn't tell you, yield. That's all they care about. They don't care about moon cycles. They sort of do. But they don't care about the 4-year cycle. They don't care about whales. They don't care about rainbow charts. All of the conventional indicators that everybody was relying on, they're not interested in them. They just want yield. If they weren't interested in yield, then we would never have any sales coming or outflows happening on the Bitcoin ETF. When you realize that if the ETF was just continuously going up in balance and there was no selling, then you would be safe in the knowledge that Wall Street is embracing the idea of diamond hands, diamond bulls, diamond whatever you want, okay? In front of you is the yields on the Japanese. Their bond auction grabbed a lot of people's attention, but this is the clue, because what happens when your interest rates are increased? You get yield. And if the yield is going up in this nation, in terms of buying the bond, what are you going to do? I've got to buy the bond. And that means I have to sell my dollars and convert it into yen. Okay? Now, predominantly, most of Japanese bonds are owned by foreign investors. And who are the foreign investors? The predominant foreign investors are American, or they are using US dollars. So you can appreciate that when the yields of the yen go up, the yields on the dollar are no more, they're not lucrative anymore. And given that we are going to see a reduction in the yields on the dollar because in, of course, 8 days' time, we're going to get a rate cut. Bets are coming in at 87.2%. So we know that the rate cut is happening. And all what you're seeing right now across the board with cryptocurrency is what? Is the expectation of the rate cut. Because they've given us the idea that the Bank of Japan are going to be hawkish. They're going to cut the rate, increase the interest rates. So we've got two instances. You've got the Bank of Japan increasing the interest rates in December, which is in a few days' time. Well, the 19th of December. What a lovely Christmas present to get everything on discount. Or going into January. So you've got two meetings, all right? One way or another, the Bank of Japan are going to increase their interest rates. Now, it's from now until that point, how is the market going to position itself? Because once they do increase the rates, that's when the carry has to start unwinding. Now, let me explain to you why we're starting to see things changing. Check this out. In front of you is the Japanese yen with gold. It is a positively correlated asset, okay? Gold with the yen. And you can see over time, yen goes up, gold goes up. Yen goes down, gold goes down. Why is that not happening right now? You can see there is a disconnect. because you've got two instances of events that are influencing gold's price to go up. The first one being interest rate cuts against the dollar. So the yield on the dollar is going down. That's why gold's price is going up. Okay. Now, because the yield on the yen is actually low, investors are favoring staying in gold. You've also got geopolitical tensions. That's what's also sending gold up as well. But you've also got accumulation of banks. They're all accumulating and picking up lots and lots of gold because the dollar itself is a depreciating asset right now, trading below 100. So there's no purchasing power on the dollar. Okay. This relationship right here is giving you the clue about how things are changing. So if this is a positively correlated asset, that means that when the yen starts to go up, gold in principle should continue its move higher because it wouldn't serve investors to stay in dollars. It will serve them to stay in gold. Remember, gold is a safe haven. The yen is a safe haven. So the logic stands that even though this is negatively correlated right now, the yen is in its process to start making a move up. Even the Bank of America thinks that we're going to go into a long December, ladies and gentlemen, and they think that the pressure on the dollar is going to keep on going. It's going to get weaker and weaker. They're telling you the carry is going to get unwind and it's going to hurt the marketplace. Want to see proof of that? Check this out. What's this? ETFs. Let's have a look at it. What on earth is that? Look at it. You see the green line, it's going up, and then all of a sudden, snap, a drop to the downside. Well, what is the TQQQ? It's the ProShares Ultra Pro QQQ, made up of lots of stocks in the NASDAQ. Check this out. Shows you here. This is a NASDAQ 100 index swap Barclays Capital, NASDAQ index swap BNP, NASDAQ index swap Citibank, NASDAQ index swap Bank of America, NASDAQ index swap Nomura Capital, Goldman Sachs, index swap UBS, Society Generale, and then JP Morgan. All of these are made up of tech stocks, information technology communication services, okay? But you can see that it's heavily weighted on the NASDAQ. So why on earth has it just seen a massive pullback in November? Massive. So hold on a second. If money's leaving the ETF money markets, shouldn't it be going into the stock market? Because that's what we want, isn't it? ETF marketplace has around $7 trillion sat in there with investors scratching their bald head and trimming their beards saying, when can I put my money into risk? But it doesn't look like they're going into the risk. Why? Because they're going into the yen, ladies and gentlemen. Look, the yen has been climbing up from these lows. Look at this. It's coming back to that spot, guys. Yen has taken its reversal from the downside. They're going into a normalized policy rate, which means they're going to be increasing their interest rates. And this thing is going to climb back up, ladies and gents. The euro on the back of that is going to be climbing up again. Okay, that's why euro is consolidating sideways. The dollar is going to move up, but it's not going to be done until the carry is done. Once the carry trade is finished and investors have adjusted themselves, that's when dollar will start to climb back up again. That's when investors will no longer need to seek the safe haven. That is when the dollar becomes lucrative in terms of the money game being cheaper for them to put to work. We have to get through this transition of yen increase rates, get the money out of dollars, chuck it into yen, let them absorb that. Then the rotation happens again, and then everything will start going back up again because you can only stay so long in a safe haven. You can't leave your money in there. You're going to naturally seek the next bout of risk. You're going to naturally want the next yield. It's transitionary, guys. That's what we're witnessing right now. And in 8 days' time, the market is going to reveal that. Because once we do get the rate cuts in December, the market's going to welcome that. Dollar goes down, euro goes up, yen goes up, okay? So the Bank of Japan, in principle, are quite smart about this. They don't have to purchase dollars in terms of the Forex intervention regarding the dollar yen. They are going to increase their interest rates because they need to maintain their 2% inflation target. And on top of that, they need to stimulate interest earned income in households in Japan. And they're going to be doing that by increasing their interest rates. They've been offering great yields of return on their bonds. So investors are going to go over to Japanese yen and buy the yen and put it into the bond market to lock in some yield. Carry traders are going to get rid of their dollars, go into the yen. So it's all one big fat yen orgy, and everyone's going to start utilizing yen. Yen goes up, stock market goes down until they say, hold on. We've got enough yield from the yen. The yields have gone down to 0.3%. Happy days. So let's now rotate, start putting money to work again, because the differences in the money that can be borrowed at 0.75%, which is what the rate interest rate is going to be for the Japanese yen in terms of December or January, then we can just start borrowing money and putting it back into the market. Dollar then starts to appreciate, and that is the cycle of fiat. So where does that leave Bitcoin? As it stands right now, Bitcoin's doing very well, starting to make a little bit of a climb to the upside, but then this is starting to come into pay attention to people. MicroStrategy CEO Feng Li, for the first time in history, mentioned selling their Bitcoin. Says the company is ready to sell Bitcoin if the MNAV falls under 1. The MNAV is currently at 1.14. And currently, they hold over 650,000 Bitcoin worth over 55 billion. Currently, MVAN is 1.14. If they start selling, it's so over. Do you think it's over if MicroStrategy starts selling Bitcoin? Do you actually think it's over? All right, there's a little bit of Bitcoin hitting the marketplace, but just look at the rotation of how much Bitcoin is being bought and sold all the time. Yes, you've got other companies that are using Bitcoin in their treasuries, okay? They are naturally going to be forced to sell, all right? But this is only 650,000 Bitcoin. How much would they sell? That's the question. If they sold 50% of it, yeah, we're going to have a bit of a problem. But you can't expect the market to completely crash because they're saying that they want to sell a little bit. Even if they sold 10% of it, that's still all right. That's 65,000 Bitcoin that can hit the marketplace. Well, there's been plenty of Bitcoin going in and out of the marketplace, so we don't really need to be worrying about that. The bigger picture of it, okay, it holds quite a bit of Bitcoin. We understand that. And it's the ethos that they have, which was, we will never sell, we will never sell, we will never sell. Even Peter Schiff, he's like, forget it. MicroStrategy is the biggest Ponzi scheme ever. They are just utilizing people's capital just to get yield, okay? Given that it does say in this that they are using it for, where is it? Here we go. The MicroStrategy allies dividend concerns with a $1.44 billion USD reserve funded from ATM equity sales and now covering 21 months of preferred dividends and interest. So basically that $1.4 billion is designed to pay dividends on the money that they have taken in and given investors the benefit of a share in MicroStrategy, okay? So they're saying in 21 months' time, that should be enough time for the market to reset, okay? That's why we need the yen to increase their interest rates now. We need to know where we are with the interest rates in the US as soon as possible, which is why it's so important that they cut, and they cut aggressively. Talks across the board are talking that we're going to get 50 basis points when we get in a new FOMC chair member, okay? So Powell, he ain't going to be around anymore, and that's cheesing me off. I'm going to start wearing suits just to commemorate the great times we have had with good old Jerome Powell. Speaking of Bitcoin, let's just look at where we are with this. The Coinbase Premium Index. Remember, just a couple of weeks ago, I was saying, just wait for a little W formation here. We've got that W formation on the Coinbase Premium, okay? It's negative. Now it's starting to climb up, okay? And you've got this little green thing, which has pulled back ever so slightly, but Bitcoin now is starting to come back up again. Is it bottoming out? Maybe. Who knows? How long for? Well, you've got a problem. Bank of Japan, potential carry trade unwind, dollars being sold, which means that's going to hurt Bitcoin. You think they would go into Bitcoin, but they're not. They're going into safe havens, which is the yen, and then it is the euro, okay? And then, of course, gold. Bitcoin should have been going up with gold, and it's clearly not doing that. The current situation with crypto is it's bad news for investors, because when you see articles like this, crypto $1 billion smacking across the board, we look at it and think, happy days, Bitcoin is cheaper. But to the average investor who's going to start buying the BlackRock ETF, look what's going on. 36 minutes ago, we've had some more outflows into Coinbase Prime Deposit. What's going on? Why are they selling it? Shouldn't be selling it. Come on. Why are you selling it? Hold on. It's going to go back up. And that's the problem that Bitcoin has. Okay. It goes down. And then when it starts to come back up, optimism in crypto comes back in, and then it makes them pay the price again. Okay. Where do I expect Bitcoin to end up? Ladies and gentlemen, we've got ourselves a little bit of a story, because the only next logical spot for Bitcoin is to succeed this range, the 74,600 zone. Why? Because it needs to test this area of accumulation, because it was the last area that they moved away from. Okay. Theoretically speaking, or fundamentally, or macroeconomically speaking, the idea of interest rate cuts in the US is favorable for investors to go into Bitcoin. But then you've got the Bank of Japan increasing theirs. And that's a bit of a problem. If we didn't have the Bank of Japan increasing their interest rates, Bitcoin would be getting ready to make a massive move to the upside. Massive move to the upside. All right? And that's the story that we've got right now, ladies and gentlemen. So when we add it all together, they're getting rid of quite a few tech shares, all right, with this big sell-off on the TQQ Holdings ETF. This is wild. Why such an aggressive sell-off? All right. And then you go over to the NASDAQ and you look at the NASDAQ and you think, are you topping out? We are so close to all-time high. All right. We get our rate cuts, peak out, roll, carry trade, unwind. That's my logic. I mean, this is happening on low volume. Let's be honest now. We just go over and have a look at the volume on the NASDAQ and you can see where we at. It's gone. Look at it. This pullback, not even being done on volume above average. We've had an outage in the CME, so that makes matters worse. But there's no volume. Price is rising on no volume. That is an issue for us. Going over into the sentiment chart, look at this. Showing the percentage of excess optimism, pessimism spread. We are at a very optimistic spot, okay? So we need to start repositioning ourselves. And the carry trade unwind is that. That's the next event. And you know what? It's an engineered event. That's good news, because we don't want to have a problem of credit. QT has ended. It's done. That's brilliant, isn't it? Let's start buying things. Problem is, everything is overvalued as QT has ended. No! It needs to sink. Carry trade unwind is the only thing that can lead to it. Once Bank of Japan increase their interest rates, the market is going to absorb it. That, for me, will be your event to see a snap drop, reversal back up, and let's start with the bull run. Going into 2026. That would then be consistent with the idea of QE. Okay? But QT is just ended. Does it mean we just go in blindly? Doesn't always work like that. But we have a path. And the path is, let's make life a little bit easier for the marketplace. Take that in your minds. QT is a good thing. Ending it is a good thing. Now we need to wait and see how they're going to put money back in. And that's going to be determined on the path of rate cuts. We know we're getting one. Let me explain. Look, here is where we are with December, 3.5, 3.75. Okay. Go to January 28, which is the next meeting. Expectations is that we're going to stay at 3.5, 3.75. Okay, cool. Now let's go to the next meeting in March. From there, you've got a bit of a distribution. We're now seeing bets are coming in on the idea of 3.25, 3.5. So by March, we will know that the bets could be getting favored to another cut at 3.25, 3.5. Okay, cool. As we go further on into April 26, where are we at? So it looks like the normalized rate right now is hedging between 3.25 and 3.75. Okay. Once we start seeing it going over to the left and seeing more bets coming in at 3.325 and 2.275, then ladies and gentlemen, that'll be something even more lucrative for investors. But look at it going into June next year. Look at where the bets are at. You're starting to see an even distribution. But these are subject to change depending on the way policy is and what's going on in the marketplace. Through it all, as long as they keep decreasing the interest rates in the dollar, Bitcoin will continue to move up. But we need to get this event done. Japan need to increase the rates so the market can price it. Then we can get back to the story of buying up Bitcoin. So you're waiting for that one event, ladies and gentlemen. You buy it after the yen have increased. That's my honest opinion in the marketplace. No BS, being straight with you. We're applying logic to the charts. Wait for them to increase the rates. They will tell us exactly when they will do it. Not when they will do it again, but when they do it, they stay there for quite some time. So you're basically getting a window to buy Bitcoin on the cheap once the market does absorb the rate hike in the Bank of Japan. So in 8 days' time, we'll know where we stand with the US dollar. Then a few days after that, 10 days, should I say, the Bank of Japan will tell us they're going to increase the rates. Once that happens, happy days. I would then start looking at buying Bitcoin after that point. In other words, we want Bitcoin realistically to slump as much as it physically can before the yen increase, because it would have been priced in. The higher Bitcoin's price goes from now until then, the logic says that with the dollars that are tied up in risk on assets, they will remove them, sell them back into yen. Yen goes up, cryptocurrency goes down. That's the basis of it all. There's no chart looking, nothing whatsoever, because interest rates dictate whether hedge fund managers, big funds, pools, insurance, pensions, whether they are going to put money, leverage, margin, trading to work. That's the truth, in my opinion. Any questions? Do we have any questions other than 259 people are in the live stream? That's a bit weird. No, 259 people like the live. Yeah? Market is now open, ladies and gentlemen. Let's have a look at where we are. Quickly go into smaller time frames on the Bitcoin. Let's have a look. Bitcoin's making a nice little climb to the upside. Green vector candles coming into play. Happy days. Going into the order flow of Bitcoin. They are offering out. Here we go. Japan's economic normalization will affect global liquidity. Here we go. Some people, oh, they won't let you read it. They won't let you read it. It's only for the monetary policy radar, gives investors a unique edge through deep insight. So basically, they're saying that yen carry trade is fragile. That's what they're saying. It says, although fiscal risks are preventing Japanese investors from moving money. Yeah. In my honest opinion, guys, this is the problem that we've got. We've got this war tensions coming into play with Ukraine and Russia. And Trump is now being accused of it being a motivation for himself rather than saving people. I believe it will be motivation for the US because rare earth metals is where it's at with Ukraine and what have you. But, Trump is a businessman and that's the truth, Looking at this chart right here is very interesting. No one's been bidding Bitcoin. So they haven't been, retail hasn't been selling. Retail's been buying. Look at it. Wonderful, isn't it? We love it. Order flow. Oh, look at that. That is a classic vector candle recovery, ladies and gentlemen, if there was one. If there was a vector candle recovery. I mean, that's absolutely smacked it. Where are we at? Hold on. I've got to look at it. I just need to look at this for a split second, ladies and gentlemen, because it only makes sense. We just have a look at this. I'm just going to share this with you all because this was the setup from this morning on Bitcoin. Where are we at? Here we go. It's pretty much on its way to target TP. Entry point at 87,396. And now Bitcoin's taken the TP. So far, so good. There we are, just about to take it. Still a little bit more flavor in Bitcoin to take. I want to see it hit 90, but we've done the entry, 87,396, and it's now cleared it all the way up towards 88. So that's a nice flavorsome move with the prospects of more flavor coming in. But TPs have been hit, so be conservative, Platinum members, especially with the other setups as well. Make sure you're taking profits because the market is open and it is prone to BS. So just make sure you're paying yourselves, ladies and gentlemen. All right. So happy days to you guys. I'll be getting an update over to you guys anyway, very, very shortly. Okay. Here we go. Matthias, selling the rallies again on Bitcoin, right? Because the rate hike on Japan is more relevant than the US rate cut. Yield, my friend. That's what you've got to understand. Okay. The yield right now on the US is coming down because they're cutting the rates. The yield coming into play with the yen is going up. So it's a lucrative spot for investors. They focus on the yield that's rising and they've got to lock in that yield. Okay. So investors are going into the Japanese bond market because they know that their bond is going to be valuable in the future because the yield on the yen is going higher, which is going to increase the flow of liquidity to go into the yen. And if everyone's concerned about the carry unwind, then that means investors that were in previous dollars will now go into the yen, thus inflating the value of the yen, bringing the Bank of Japan's concern of inflation to its target, okay, of 2%, at the same time creating income for households. So that's going to be happy days there. At the same time, try and reduce this wage inflation that they've got. And at the same time, bring the value of the yen back up because it's so deflated. It's horrible. You got to imagine, households need to have more yen just to keep up with the price of bread. So by increasing the yield, you're inflating the yen because investors want the yield payback on holding Japanese bond. The dollar, well, it's reversing. It's going down. And we need to wait for it to get to a spot where the market says, now's a good time to start buying dollars. Sell your yen back into dollars, everything shoots back up again. Everything pulls back. Discount City, buy it up. Why is Warren Buffett still in $380 billion worth of cash? And why is he all the way over there in Japan? What's he doing? Understand how much buying power Buffett has right now. Absolutely huge amounts of buying power. We're just going through an interest rate transition. That's it. Off you go, Bitcoin. Tino, is it better for a small investor to go into Solana after the carry trade, or is Bitcoin the only way to go? Quite frankly, I'm not. Yeah, but look. Just to answer your question in a second, you got this guy saying you're happy about retail buying because you know it means it's going to drop hard. Fundamentally, yes, I expect that. Okay, but we can profit from it. I'm going to be doing a session on this, okay, on the vector candle recovery and what you've got to look for. It's going to be on the whiteboard and it's going to be the video for this evening, okay? And I'm going to be talking about what's happened here on Bitcoin as to help you understand the mind map that you've got to put yourself in to understand why the chances of this happening were high. There is nothing guaranteed in this game. Nothing. Something, as Ed Sakatoa would say, sometimes it works all the time, but most of the time, it's not going to work forever, okay? So you've got to really get that. If something that you use works, put it to the test it, play it. If it pays you, walk away. If it doesn't work all the time, accept that because there's nothing that guarantees it's always going to play out. At that point in time, based on the projection, the idea was we wanted to see prices going up. I'm going to break down why we favored the higher price move in Bitcoin from a macroeconomic perspective to a technical perspective. Okay? So make sure you tune into that bad boy later on tonight. Okay. Traders Rally, can you wear a Santa hat for a Christmas live? Done. I'll wear a Santa hat. What needs to happen to go back to the dollar? Interest rate path has to normalize. We don't know where we are with the interest rates. We know we're getting cuts, but we don't know if we're going to get a cut. What did we have not so long ago? Oh, we're gonna go easy on the interest rate cut. What? How does that make sense? The bets for the rate cuts in the US went from 23% all the way up to 80%, okay? Sorry, not the US. It went down to like 50%, and then it shot back up to 87%. For the Bank of Japan, they projected that they were not going to cut. 23% expected the cut. 23% expected the cut. Then Ueda spoke. Now that's shot up to nearly 90%. So rate swap traders are betting that there's going to be a 90% chance that the rates in Japan are going to increase. They're being polite and they're giving us the heads up. So when assets are moving up, what do you think's going on? They're selling it. They're trying to get rid of the risk because they're making the market believe that it's already priced in from this little drop. Then when the actual event happens, drop. Hence, buy the rumor, sell the news. Federal Reserve just pumped $13.5 billion into the US banking system through overnight repos. Yes, this is the second largest liquidity injection since COVID and suppresses even the peak of the dot-com bubble. Yes, yes, but QT has ended. We now need to start seeing the money coming through. And because we don't have any credit swap issues, even the Bank of England has said that most banks in the UK are passing stress tests and they're all good. Credit is not an issue. It's just a relocation of capital. Carry trade unwind. That's what's going on. They're just relocating the capital. Tino, look at NQ. Very minimal pullback, but doing what it needs to do. It's a good day for setups, quite frankly. Please, Tino, don't forget my sole question for small investors. Instead of going into Bitcoin, after carry trade for more percentage move. You're going to get a bigger move with Solana, of course, because remember, Bitcoin requires more liquidity to move, okay? Solana doesn't. So treat Solana as the meme coin, all right? Wait, in my opinion, you start putting down big size on Bitcoin once we have got the rate cut, okay? Sorry, once we've had the Japanese yen. Once that event is done and the market responds to it, then you start to consider purchasing Bitcoin. But the key to it is this. Whatever price Bitcoin sits at on the eve of the rate cut, sorry, the rate hike, hear me out here. Whatever price Bitcoin is once the Japanese have increased their interest rates, okay? If Bitcoin drops down, hypothetically, to 74,660, and they've given us the rate cut, the rate hike in the yen, and the market has reacted, and Bitcoin has managed to stabilize itself at 74, your goal is to try and profit from Bitcoin moving from 74 all the way up to 92 or even 100. Just for the love of God, take something. That's a 25K move in Bitcoin. At 100K, what are you hoping for? All-time high, 25K move in Bitcoin, okay? It's not always going to keep moving up. It's these pullbacks, look, and Bitcoin seldom comes. It always ends up sticking to the narrative of what it's doing. If it's going down, it spends a bit of time going down. If it's going up, it spends a bit of time going up, okay? But make sure you're taking something off the table because it's always going to pull back. It will. And that pullback is you stepping in at a discount. Because if you've made money from 74,000 all the way up to 94,000, that's a 20K move in Bitcoin nearly, okay? Cool. What's the profit on that? Okay, you take it. Close your trade off at 94. Then what do you see happening? Bitcoin comes back down to 90. You then buy again. But this time, you don't need to buy as much because you've made a bit of cash. So you put a little bit more in terms of value of dollars, okay? And then you hold it for less time. And you don't need it to make a bigger move. That's the thing. I always say I want to put the most amount of money for the shortest amount of time to try and make the most amount of money. That's what a scalper does. And as holders, that's what you should really be doing. Because gone are the days where we're like, oh, we need Bitcoin to go to 300,000. Okay, cool. Let's get above 150. Let's get above 190. Then we can think about 300,000. Because people think that they're going to catch the one price, and that's going to be the one price that sends Bitcoin to where it wants to go because of the public saying it has to go there. Well, forget that. Unless you want to sit through the drawdown, cool. Just hold on. But if you want to make money in Bitcoin, then when it presents itself, take it, get ready for another purchase. Because you will find that the more money you're earning off Bitcoin, the less time you're having to spend in an exposure, which means you don't need Bitcoin to move that much up for you to make a good return. Are you in it for the tech? Because if you were, you wouldn't even be looking at these charts. Let's be honest now. You wouldn't. At all. But the US cut won't be as powerful as a hike in the yen, right? How much money borrowed from Japan is the market compared to the US owned supply? Good question, okay? But the problem is, the bond market is about $150 trillion marketplace. That's a lot of money. But you've got too many participants playing that market. You don't have individuals playing it only. You've got the Japanese that are the largest holder of US debt. You've got the UK coming in second. The Chinese third, okay? So there are more participants playing US debt, but from different nations, all right? But the fact is, there are more participants using dollars and exchanging it to yen. All right? So naturally, the change in the US dollar, in terms of yield is only going to be impacting the person that wants yield. When a nation increases its interest rates, that's when you start moving money. Because when they're starting to cut, yeah, money's cheaper, but I'm not picking up a yield, so I have to go elsewhere. That's domestic and commercial in the US. They won't think twice to sell dollars. And you know that's the truth because your dollar hasn't got any purchasing power. They don't care. They want yield. If yield for me is going over to the yen, I'll go over to the yen. If yield for me is going over to the Aussie, I'll go to the Aussie. If yield for me is in the euro, I'll go to the euro. Looks like the euro is not going to be cutting its interest rates anymore because inflation came up above expectations, 2.2%, when they projected 2.1. So they're going to probably lay back on cutting the interest rates anymore. They wanted to get a target of 2%. Nope, they're going to stay at 2.14 because inflation's still a problem. So that means yield on the euro is going to be higher for longer. So I better take my yield over to the dollar, to the euro, sorry. Okay, cool. Mad love to all the guys coming in on the stakers. Mad love to you. Mad love to you. T, can you explain the relationship between the options market and the market maker hedging in the futures markets? Delta neutral, gamma negative. So it's basically market makers in options. They don't care about price. They care about the direction of it's more direction of exposure. So if the exposure is down here and that price point happens to be 6, Bitcoin's 88, yeah? And if the exposure or where they can achieve delta neutral is at 51 and they're in risk, what they will do, they will sell the underlying to get to that point, okay? Because once they hit that price point, then they would then maintain delta neutral. They would have covered themselves. It doesn't matter what the price is. What matters is where the exposure is, okay? Okay. But if Japan drops US bonds, couldn't that yo-yo effect? Well, it could. So what they're going to do is rather than lose out on holding the US bond, okay? Because remember, if they need to intervene, they can sell some US bonds and get lots of dollars for it and then dump it into the yen. But they don't want to do that because Trump's sniffing down their throat with Forex manipulation. They don't want to do that. So they're going to do what they know. Increase the interest rates because Trump can't say nothing to that. Can't. Should I go bald for Christmas so we can be twins? You do it, my bro. Do it. No, my throat is dry. Long-term bullish, short-term bearish. We hit 75 before we hit 100. Okay, maybe. That's something we can do. But the US, yeah, that's it. All right, then. With that being said, I think that's enough flavor for you today, ladies and gentlemen. If you've enjoyed it, hit the like button. If not, hit the like button. And if you just subscribe, all right? And I'll be tuning to you all later on. Peace.